We are back with an update to Josh's best stocks in the market. I'll send it to you for that. What do you want to talk about?
I think, obviously, the thing that we have to talk about is the defense sector. We've got a bunch of these names on the best stocks list. We've been talking about them. And last week, of course, they broke out on the heels of the conflagration in the Middle East getting hotter. We talked about Axon, and we talked about RTX on May 19th. From that date, RTX is up about 8.5%. Axon's up 5%. Both stocks were breakouts in progress, and they have broken out. So that's the update I wanted to give people. In the column at CNBC Pro, I'm talking about moving up stops and what to do when you've got a winning trade on your hands, depending on whether you're a trader or you're a little bit of a longer-term investor. But those rallies are significantly greater than the Qs, which are up 2% in that time. SPY is up about 1%. I think it's important to just acknowledge the fact that the market sniffs these things out before they happen in many cases. The median return, Judge, for an aerospace and defense sector stock year to date is 17%. The median year-to-date return for every other stock in the S&P 500 is just 0.7%, not even 1%. Every single aerospace and defense stock is above its 50-day moving average, and only 2 of them are below their 200-day, meaning not yet rallying. Those would be TXT and LMT, Lockheed. So when you're looking for, like, where is the strength in the market, what stocks am I supposed to be in, this is a really smart way, I think, to just say, okay, I'm not going to be ahead of the curve on everything. What is the market already figuring out? These are just two examples of many where the market has already figured out things are heating up in some of these conflicts, orders are coming in, and these stocks are going to work. And lo and behold, something happens, a catalyst, you get that breakout, and now you're playing with the house's money.
Belsky, you own Lockheed, you own Northrop Grumman and Honeywell, so you believe in the aerospace and defense trade?
We do. We look at these as the OG defense contractors. Plus, we're aligned obviously with Josh, but I think you also have to think about cybersecurity along with defense contractors. But these companies are amazing because of the cash flow and the dividends and the consistent earnings, guaranteed revenue from the U.S. government. So that's why we've owned them for a long time.
GE Aerospace for you?
Yeah, but it's small defense. It's only about 25% of total revenue. But they delayed their analyst day this week because of the Air India crash tragedy. I do expect them to have another one soon in the next month or two. And I think they're going to increase their EBIT growth rate from $10 billion to $13 billion by 2028. Free cash flow and mid-20s margins as well. So I still want to be long this stock, but I have to say I do prefer Boeing. It's cheaper and it's more of a turnaround story. GE, it's already turned itself around.